this would be the first trade of the week, short from the bear order block. And instead of taking early, even though it's 1 to 3, I'm supposed to take it to a lower price. And the reason is if it's below the volume area, it's most likely gonna go crash down. So I'm supposed to take it lower. One lesson. and then on Tuesday morning, all right, this is a Tuesday morning. Tuesday morning, when we analyze the market, we see a fresh bearish order block. We see the bear order block. We enter on the bear, and we close on candle close above the bear. So this is a good trade, good losing trade.
It's not a bad loss.
It's a good loss. It's a good loss. Let's have a look. Yeah, it's a good loss.
Because if we can accept that loss, then we can pivot and we can see the long opportunity here.
Yeah, this is a good loss. And
this
then
was a great pivot.
Yeah, and then we have a confirmed change of character. Then the price drops to this breaker block and also the order block. So when order block and breaker block is at the same time, I'll rather keep it together, like smash them together.
It's a combo combo.
Yeah, it's like a really nice zone, because that means resistance going down, resistance try to go down but smashed up. That means most likely on the same area it's gonna go up. So this is a good long, and we took this long. This is the trade that got us cocky, I think, throughout the week.
Yeah, it did.
Yeah, we were like, oh, we won so big. But this is the trade that made us cocky. And it went up, smashed up. We took a short from the point of control of this swing.
The cocky is getting the rebound.
Yeah,
getting the counter on the news, actually. This was the cocky.
Yeah,
the
that
short
one.
Here that we won.
Yeah. So this short is the short that made a long and short. These two trades made us cocky. And this short position, we're not supposed to take it.
Fundamentally.
Yeah, the long was correct.
The short was right after news.
Yeah. This was a wrong. Even though this was a profitable trade, it's a mistake to trade it. Well, it's not a mistake. It's not, you're not following the strategy, right?
I think our dopamine was high.
Yeah, the dopamine. It's the dopamine. Even though it's a winning trade, we were not supposed to take it. So Tuesday we only have two trades. So this is 400 pips, 100, 300, 700. Okay. And when the price go, yeah. Oh, no. There's another trade I took, which is a short. I took a short trade here, which I'm not supposed to take. I think it's the trades that got me the wins, even though I'm not supposed to take, makes me cocky and not follow the strategy. So this short was a really not good choice.
I don't know if I got in that short. I think I was holding on to the first short from the top.
From the short, yeah. Yeah, no, because I got out with 300 pips and I saw internal, because internally break of structure, right? Internally break of structure. So this zone is a very solid like area. This zone. That's what I was thinking in my mind. Even though it doesn't matter what I think though. It matters what the market gives us on 15 minutes. The market gave us this block. So this, I should just purely ignore this. Yeah.
I actually did try to take my short down to that order block, and I did get it at the order block. I wasn't quick enough to.
So you shorted here and took it here, right?
Yeah.
Yeah.
I didn't get the wick though. I got like the average of that high, like around there. Yeah, right there. That was my average position.
And the long from this order block is also correct. and we closed on the candle close below this. This is a correct close.
Yep. And then we closed everything there.
And we closed everything there. And the short, I tried to enter a short position because usually when the price goes below the order block on a retracement, usually it comes back down to break this usually. But my strategy does not do that. We don't do that, right? We only do it after the confirmation of change of character. Then when the price goes to the breaker block, I short. So in this case, we don't have a confirmed change of character. We don't have it, meaning we don't use this breaker block for short entries. But I did. So this was a mistake trading, and I closed here. So this is a short entry that I'm not supposed to take. So far I have 3 entries that I was not supposed to take. This short and the short here. Like these trades I was not supposed to take, but I did. So I really gotta relearn it.
That very last short, I did not get in on that short. Yeah. You were telling me to short, but you told me to short at the order block. So
yeah, here
on that long candle.
Yeah, this is also another short that I entered. Called.
Yeah. And then we had to get out.
I had to get out because same reason. This is a very important zone, right? For me, this is a very important zone for me. I thought it was a good price to short. Again, this is not the strategy. So if it's not the strategy, just don't do it. You know, I shouldn't have done it. And I went to sleep after this short failed, but this could have been a winning trade actually. Yeah, this could have been a really nice winning trade.
Take it there.
1 to 3, yeah, 100%. Yeah, 1 to 3, 100%. Like 300 pips, 400 pips, 100% I'm taking it. Because my risks are usually 100 to 150. If you can look at my trades, this is 121, this is 100, this is 72, this is 140. So my risks are usually 100 to 200 pips. Like if it's more,
you're not actually trying to take profit at an order block. You just want to take profit at a risk to reward ratio.
Yeah.
Okay.
But
I thought we were.
But
we were taking profit at the order blocks.
Yes, but my position size, but also if I can get 1 to 3, I'm definitely taking it.
Okay.
Because my win rate is already good enough, right? My win rate is already good enough. And also, the taking it to next order block strategy is when there's an empty strategy that we haven't taken. So for example, let's say here. Let's say here. So this one, when we have a change of character here, we have a bear order block here, right? We have a bear order block here. And we did not touch it. This one did not touch it.
Yeah.
Meaning this is they call it unmitigated order block or something like that. When we have order block like that and we have a confirmed change of character, that's when I take it to the order block. That's when I take it to the order block like this.
Confirmed change of character.
Yeah, after a confirmed change of character, we will take it to this order block. So this order block we will ignore.
Okay.
Yeah, we will take it to the one above, because most likely price will react here, but most likely the price will react here. More likely the price will react on the one order block above. So we will take it. Yeah, we will take it there. Which is what I did, right, on this trade. I entered on this long. I took my position here. That's exactly what I did, right?
You did do that.
Yeah. So that's when I take it to the order block. But when there's no order block above and price is going like in the range side, if I can see a 1 to 3, I'll just take it.
Okay, yeah, that makes sense then.
Yeah, I'll take it. So this trade should have taken it, but I did not. And so Wednesday we will have one trade only. But in reality, I had one trade, two trade, three trade, and four trade. I had 4 trades on Wednesday, where I'm only supposed to take one.
Yeah, and then that last one, that last long there, that was a
Yeah, 5 trades actually.
impatient, impulsive one. That long.
Yeah, this one.
On the right side over there.
This one.
Not that one. The next one actually.
This one. This one is Tuesday. Sorry, it's Thursday.
That's when I tried to long.
Yeah,
just yesterday.
This I'm not sure if this is a bad trade. I think this is a valid one, but you know, in Chinese community, there's a saying, testing the order block 3 times, the 4th time it will break. So let's say that this blue one is the support, is the resistance. Then the price will come up, bounce,
1, 2, 3,
bounce,
and the 4th one kills
bounce, and then 4th one will definitely break. That's the Chinese market saying.
Chinese the same as Japanese, where 4 means death. Sounds like death.
Oh shit! Yeah, it is.
So that's when it kills the order block.
Oh shit! Yeah, you're right. Yeah, you're right. Maybe because of that, but we can see it, right? Test it once, twice, 3 times, 4th time, 100% it's gonna break. But I'm not gonna trust that strategy, right? So
exactly rely on that.
Yeah, we don't really rely on that. So Tuesday, I'm supposed to take one trade only, one losing trade only. And then after that, we have a confirmed change of character in 15-minute time frame. Meaning, on Friday we will have a trade, which is here. I recorded the video this morning. What is this? Oh, this is here. Okay.
It's because you extended it to.
Yeah.
Oh wait, it's a line.
No. I extended this. So I longed. I think. Yeah. I longed here. Why? Because higher time frame, right? If you go to higher time frame, like 4 hours, there's so much buying pressure. So much. Bounce. Like there's so much buying pressure. I was like, it's gonna go up. It cannot continue down. It cannot continue down. And then
it's the Chinese 4th time. It should have killed the order block, but it didn't.
Oh well, higher time frame. So you don't know. Maybe on Monday it will go down. Maybe we don't know.
1, 2, 3, 4, 5.
So I longed here, and my stop loss because I traded the fair value gap or face value gap, they call it. This one. So you enter position at the beginning of the fair value gap, you close on the low of the first candle. And my original take profit was 3.5 or 3.7. And the reason for that is this. The point of control. There's massive volume here.
This stinks.
Yeah, I was gonna take it all the way here. So I was like 1 to 3. Yeah, 1 to 3 ratio looks good. Looks good, right? I took it, lost it. It's a trade not supposed to take. Not supposed to take. And another trade I'm not supposed to take, which I said it in this morning's video, is even when we see a break of structure, we will have a new order block. In the video, I said it clearly. I'm not gonna short into the massive buying pressure. I said that in the video, and I knew it in the heart. I know it in the heart, right? I know in the heart I should not take it, but I took it. So the new bearish order block is here, and took the short, loss, right? So 90 pips loss out of nowhere. Another trade that I'm not supposed to take. So this week I'm only supposed to take 1, 2, 3, 4, 5 trades, but I took like 12 trades. I overtraded this week, and let's calculate how much we win with this strategy. Right? This is 400, 100, 300, 300, 400, 700. Yeah, 700, 700, 600, 600, 500. So this week we will just be out with 500 pips. 500 pips meaning if you have 4 position, that means you will get 2000 USD, right? 2000 USD. Take it. Good. 2000 per week. Good.
That's great.
It's good. Good win. Good money. Follow the goddamn strategy. Follow the goddamn strategy, you know?
Yeah.
Just you don't I shouldn't trust my instinct, right? I used to trust my instincts before, and I decided to create a strategy that I can follow strictly so that I can get more reliable profits and loss. That's the whole reason I made this into a strategy. But I did not follow it this week. This week particular, actually.
Yeah, you came up with a strategy that you found in backtesting would win more times than not. But you had to adhere to it like a machine in the moment. I guess that is the problem with trying to stick to a strategy. It's the flaw.
Yeah, it's the flaw. I need to get rid of it. And in order to get rid of it, there's only one thing. I think it's discipline. Discipline, and also I don't know what it is. Discipline only. Like, why did I try to take a short here? Like, it is a good short. It's not a bad short, but it's not the strategy, right? So if it's not the strategy,
that I had kept my short.
Yeah, this is not a
Yeah,
good short. This is not a good short.
Oh, that entire thing is not a good short.
No, it's not. I mean, it is.
Yeah.
The outcome is good, right? The outcome is good.
Not your official strategy.
Yeah, it's not the strategy. So this
on point of control.
It is on the point of control. So if it's not the strategy, yeah, it is. So if it's not the strategy, then don't do it. You know, don't do it. Like if your gut can make money, then fuck the strategy. Just trust your gut and buy or sell, right? It's just this week particular. I think after these 2 trades. What'd you say?
After we lost those 2 ones where we wanted to long there.
Yeah, right? Yeah, these 2.
And then the candle closed underneath and it forced us out, both of those trades. It made us hungry to just get
back, you think?
Having 2 losses like that.
Yeah, having losses like this, and then we wanted to get back the money, try to long here. We were like, oh, it's definitely coming back.
We were like, we were correct, so we wanted to try to.
Yeah, I don't know. But this week, we were only supposed to take so little trades, but in reality, we took so many. Yeah, I don't know.
Yeah, for me, I think it was because I had never made so much of my account size, like money and profit, trading gold before.
The long and the short. Yeah, it's like 1,000 pips each, right?
Yeah, and then for you,
it's like 1,000 pips each. Yeah.
Oh man, yeah. I'm winning and
1.5. Yeah. Wow,
1.5.
1.5. If you do the risk correctly, you can double it. You can double the account. 1.5.
Let's try to adhere to that then. 1.5 take profit next week.
Yeah. I think not forcing yourself. So for example, right, I think this is the mistake I do still, is that I make myself a daily target, which I should not do, and also I don't recommend. I have a weekly target, daily target, monthly target. And I do opposite. I do daily first, then weekly, then target, then monthly target. Meaning, every day I should get, let's say, $100. meaning weekly I should get $500, meaning monthly I should get $2,000. I do the opposite, right? Whereas the correct the correct idea should be, let's take the trades first for a couple of months and let's see how much I get per week and month by following the specific trading style that I do, that I can follow. And then you calculate the daily target. And also the daily target doesn't make any sense because someday you win so much, someday you lose. The daily target does not make sense. So the daily target we can easily ignore. I think the only target we should be careful in our mind is the daily loss target. So we're not supposed to lose over however the amount. Let's say my position size is 5. Let's say one position, then my average average stop loss is 150. Then that means let's take a step back and I only take 2 trades a day. That means my stop would be 300 pips. So that means my target daily stop loss, so it would be 300 pips or $300. So if it's over $300, not trading for the day, something like that. That's the only target we need, I think.
So if your position size was like 5, then you instead of 300 pips, it'll be like 60 pips.
Yeah, 60 pips.
Yeah. So we're back to basics, huh?
Yeah,
like rather than focusing on a profit, like I forbid yourself from trading when you lose a certain amount, because then it's revenge trading.
Yeah, it is, because setting a daily target can easily get you to revenge trade. Like you can imagine, right? Because you have your daily target that you need to achieve, and if your first trade is a loss, then obviously anyone will revenge trade.
You might try to double down.
Yeah, anyone will revenge trade. Whereas if you have a target of a maximum loss, then you lose one trade, then the next trade you will be so much more careful, right? I think that's that's so much better. That's so much better.
That form of discipline sounds much better.
Yeah. So fuck the daily targets. Fuck daily targets.
Sit with your loss and then come back with a more serious attitude.
Yeah.
Makes you like more willing to only take trades that are winning.
Yeah.
Winning trade.
That's the better, that's the smarter thing to do, and that's the correct thing to do that we should keep in mind. And also, look, if we didn't take the long and the short here, we could have just waited for this long easily to take it to our original. So this is our original target. So this would be 300 pips, right? With 100 pips loss. Like this is the correct trade. Like we don't know how it's gonna end up, but I'm 100% certain that this is how the market is gonna go. And
once it gets that order block, will you be shorting?
No.
Okay. Because we are not shorting into the huge buying pressure underneath.
That's one reason, but another reason is so let's assume that my drawing is how the market is gonna go, then that means the price will have to break this high. Meaning when the price gets broken or when our profit gets hit, it's either a wick or candle close, right? Do you follow so far?
A wick or a candle close into the order block?
No, forget about the order block for now. If the market goes according to my drawings, so for example, from now it goes down to the order block we drew, and then it goes up to our profit TP target.
It's just gonna be a wick.
Yeah, there are two. There are two options. It's either the price gonna wick to the order block and goes down, or the candle close above, right? If it's just a wick, then you should be happy that you took the profit at the wick. That means you got the top, you got the tip, right?
Yeah.
We should be happy, celebrate, instead of thinking, oh, where's the short, where's the short, right? We should be celebrating the take profit. That's the first option.
Okay,
Second option,
mindset.
yeah, second option is the candle close above this. So if the candle closes above this, what does that mean? That means we have a new structure higher low. And what else do we have? We have a new bullish order block. So if we want to take a short, we will obviously wait for the price to go below this breaker block, order block, and hopefully it gives us a change of character. Then on either the breaker block or the new bearish order block, we try to short. That would be a good short. That would be the strategy.
It seems so simple.
That's the strategy. That's the strategy. I mean, the strategy
the two outcomes, only outcomes.
Yeah, like only outcomes.
The wick or close of the candle close above.
Yeah.
Order block. True.
Right. So taking a short from here, yeah, sure, sounds good. But is it our strategy that we can follow strictly? No, it's not. It's not. It's only the order block. So yeah, we should just simply follow the strategy.
A change of character, internal change of character. So it should be longs. It shouldn't be a short.
Yeah, for now it's a long. Yeah, for now we'll be looking for longs. And if this order block gets taken, most likely it's a short also. But again, not taking short. So much buying pressure, not taking short. Again, not taking. I'm not taking shorts. So if I ever try to take shorts, you should remind me. It's not a short. We shouldn't take a short. It's not a short. This is a good strategy. Easy to follow, good strategy that can make us good money over long term. We should simply just follow it. This week I did not follow it.
Okay. It's back to hammer time.
Yeah, it's back to hammer time. I need to get my shit straight.
We buy ourselves a hammer anytime we think about going against it.
Actually, we don't need to think.
You don't have to.
We don't need to think. We just observe the market. If it's in the strategy, you take it. If it's not in the strategy, you just ignore it. Set an alarm there.
Like Avatar: The Last Airbender, neutral Jing. just wait. Do nothing until the time is right.
We do nothing. Like I remember this short, right? This short is a losing trade, but look at how much volume is traded here. And I also remember that I couldn't hit my long, right? I couldn't hit my long. But this is discipline right here. Like these are discipline. I didn't trade short, I didn't trade long. This is called discipline. This is following strategy. Look at the movement here. I traded nothing.
Yeah.
How much is this?
Never came back down to it.
This is 1.6k. Yeah. It never got down to the order block. Never got back.
You would just be thinking, fuck, my stop is way too far below.
Yeah, you don't even need to think long. You just have to be like, oh, this is where my long is. If it doesn't reach, you don't long. When we see a break to the upside, you'd be like, oh, this is where I long.
A good way to think about it is the market doesn't owe us these trades. Like it doesn't owe us money.
No.
We just wait until it's a winning trade.
Yeah. Gotta wait. Gotta wait.
If you miss a trade, then you can't think that, fuck, I'm missing out on that. It doesn't owe you that trade. It doesn't like owe you money.
No.
For you not like having been in it or not.
Oh, interesting. This trade is interesting. I took a short here. Yeah, this is a good try actually. Even though it failed, this is a good try. This is a good. Oh, look at this. Can you see my screen?
Yeah.
This is a good try. This is a good short, right? Because we have a break to the downside order block. You short from the order block, right? This is a good trade. And this long is also a okay long. Why okay long? It's there's a market squeezing. Market squeezing. It went above. You long from this. This is a good long. This is a good short. What's not a good trade is this short. This short should never happen. This short should never happen.
Why did you take that one?
I have no clue. I have no clue why I shorted this.
It didn't even break of structure down.
No.
Yeah, either.
Yeah, this short is really bad.
Yeah, turned out well, but
I mean, this structure-wise, it is still a short because it did not break the structure high, the lower high. So structure-wise, it is still a short, but this is not a good short. This is a really bad short.
how could you justify a short like that anyway?
I have no clue why I thought that was a good short. And this is a 4 o'clock also, like pre-London session or mid-London session. I don't know why I took it. It's not a good short.
Is it because of the order block at the previous mini high?
Yeah, this is the breaker block, right? It broke above, but then it came down again.
That one right there, like that candle, the last like green candle before it went down, so up at the previous high. Yeah, that one. Like maybe that one. You could technically short there, but not really because that was a wick. That
yeah, and also there's so like it's not obvious, right? The trend is not obvious. The price is ranging so much here. So this is not a good shot. Like as soon as I saw that, I was like, no, this is not a good short. Whereas this would be a perfect short. This is a perfect short. Why? Because on a higher time frame, we're still on a downtrend, and 15 we confirmed change of character, confirmed, right? And then we have a order block. We take a short. This is a good short. But that short before was a terrible short. So sometimes the terrible trades can win, right? But it is those terrible shorts that got you the win will make you forget about the system you created.
Yeah,
and the best way to strictly follow the strategy is not take any trades. That's not the strategy.
Like you put a chicken in front of like two different buttons and you put like a worm on both of them. Like the chicken will hit one, and 50% of the time it'll win.
Yeah.
Like
those
trades without proper structure, they're 50%, and if you happen to win them, didn't really mean anything.
Yeah. And this one also, I don't want to talk about this. We entered on a tip, and even I remember posting, recording the video. I said this could be one of those 1-20 ratio trades I want to hold. I remember saying that in the video, 1-20 trade.
Yeah.
And I go push it out here, I think.
Put it up. Yeah, real high.
Yeah, I don't want to see this. I don't want to talk about this. Yeah, but yeah, following the strategy strictly, correctly.
Man, that's 3,000 pips.
Yeah. So following the strategy strictly will make us trade less.
I should draw that order block. Are we setting a long on that order block?
I don't know, man. Market open can be crazy on over the weekend.
Oh
so
yeah, that's right. We are at the end of the week.
Yeah. I actually don't understand the market. Like, why didn't it go up here? thing is, we shouldn't. I don't need to understand the market. I only need to understand my strategy and how to strictly follow it. I don't need to understand why why it goes down, why it goes up. Nobody understands it, right? Does anybody understand? Maybe Trump understands it because he's the one moving the market.
Creating it.
So I don't need to understand the market. I don't need to understand why it goes down from here or why it does not touch the order block then goes down. I don't need to understand. I just need to know the fact that it did not touch the order block, meaning there's no short trade for me. I just need to observe that there has been a change of character, meaning I shouldn't long from here. I just need to know that. I don't need to understand the market. Yeah, this is a good session to talk about our mistakes,
Thoughts.
to learn from the mistakes. Yeah, get our mentals ready over the weekend and strictly following the strategy from Monday. Because this week we were supposed to get 500 pips. I'm only up to 20. I'm only up 20. Because for the week.
So you've actually lost all of the winnings from the beginning of the week.
I did, yeah. Because I lost so many trades.
Yeah, you're
like in terms. Actually, if you look at this in terms of winning, we only have 1-2 winning positions, whereas we have 3 losing positions, and we still have 5. We still have 500 pips winning, even though we have 3 losing trades out of 5.
I am definitely holding on to my winnings.
Like this, you held it all the way up, but I'm only counting to this order block here.
Yeah,
I'm only counting because this is where my TP was, and this one also. I'm only counting 400 pips because that's where I took it, but I'm supposed to take it lower to the break.
So the Monday down, the Tuesday up, and the Wednesday down.
Yeah, you got all of them. Yeah,
Wednesday down. So I got all of that. And then from there, I started to lose a few trades.
And these are ranging market, right? Ranging market, you can easily lose the market. That's why you only follow the market structure. If you only follow the market structure, you lose less. Whereas if you try to long here, short there, long there, short there, there are double chance, right? It's just simple math. If you're only trying to long, and if you're trying to long and short, you obviously lose twice more. So yeah, maybe even this is not even a good one. Like when I don't know, but it's okay.
That one felt nasty.
Yeah,
that's okay.
Yeah, this actually, what I want to talk again is this week is actually the opposite of what happened last week. Do you remember last week?
Yeah, last week was the worst.
Last week was the worst for me. I had like four losing trades from Monday. So for example, this is the order block, right? This is the order block. This is a losing trade. Losing trade. This one is not a losing trade, but this one was a break-even trade. This one was a break-even trade, and this one was a long losing trade. Long losing trade. This one was a big loss. 100. Yeah, this one was a big loss. Like I lost break-even loss, right? And this so loss again. Loss again. And loss again. Like this is horrible. It was horrible. Loss. 5 losing trades. 5 losing trades. Can you imagine 5 losing trades starting from the first trade of the week? Crazy.
I was there with you.
Yeah, crazy. And then the one trade from the breaker block, the one trade. I get everything back. if not more. Like
Unlimited budget works.
70 break even 70 break even 70 240 350 460. So 460 loss. This is 460 loss. 5 losing trade, 460 loss. 1 winning trade, 700.
700 yen? 700,000?
No, pips. 700 pips.
Oh. Oh,
I'm
no.
only counting pips. So this is just 1 winning trade. It gives us what, like 240 pips? Right?
Yeah. 50% of your losses converted.
Oh. And then this one was a loss, but this one was a win. So that's 100, 300. So that's 200. So this week, again, 440. Last week, 440. Yeah. Should seriously stick to the strategy. If I can manage to follow the strategy strictly, these are the results, right? And 440 pips a week, and this week was how much? Was it 500?
500.
Yeah, 500. So 440, my average is 4 positions. So that's roughly 1780 $1780, and this week is $2,000 with 4 position. Like we should follow it, right? 2 weeks you get 3780. Is that a lot?
I was lucky. I was lucky to actually be making the same amount that you did this week.
Is that a lot of money?
To me, it is.
What's $2,000? Because I don't understand dollars, right?
Oh,
$2,000. Okay, $2,000 is 300,000 Japanese yen. Is exactly the monthly salary of my teacher,
of your employees.
Of my employee.
Yeah.
So I get their monthly salary in 1 week. I should just take it, follow the strategy, and take it.
You know, you're like a dad who goes to the pachinko. He wins like a few toys or a few candies, comes home and gives it to his kid.
Yeah.
Except you're winning.
Bro, we should do this every week. Like every day, every week. The beginning of the day, we do the market analysis, right? End of the day, we do what we did wrong or what we did right. We do this daily, we do that, and then at the end of the month, Friday, we do the weekly. And we keep on doing this. Let's say we keep on doing this for first week, right? We keep again doing it second week, again third week, again fourth week.
I'm definitely down for that weekly recap.
Yeah, that would be, yeah. Every day is too much, right? Because I have work also. Every day is too much, but weekly we should do it.
Yeah, absolutely.
And then if we keep doing it for 4 weeks
into the month.
Yeah, we do 4 weeks. That will be a month, and we do another 4 weeks. That'll be 2 months, and 2 months, right? Let me calculate.
Yeah.
2 months would be no. 2 months would be 8 weeks.
Almost.
Yeah, 8 weeks, and 8 weeks. So the previous 2 weeks, we can get roughly 500 per pip. So 500 times 8, 4,000 pips. 4,000 pips times let's do 4 position. That'll be $16,000. How much is that? $16,000.
Let's see.
$16,000. 2.4 million. 2.4 million in 2 months, bro.
Times 4,000 pips. What? There's no way. Oh, no. My bad.
2.4 million in two months. You want that? I want that.
I definitely want that.
Ah, I want that. So let's do it. Let's do this. We do this weekly. We do this daily. We continuously do it. We do it until we get sick of it. Right? We do it until we get sick. It's like breathing. You don't focus on breathing. And you don't ask why I'm breathing and why I breathe out. You don't ask. You just do it. You do it because you do it so many times that your body just naturally do it. Same thing with this strategy. We just have to do it so many times to the point that we get sick of it.
Stick to it, huh?
Yeah, we have to do it so many times to the point we get sick of
I'll
it.
be making 1700 for my average position. Yeah, that's great.
Yeah. We really should just do it so many times we get sick of it. And forget about the instinct gut. Forget about why the market moves a certain way. We forget about it.
It's kind of a diet. We just eat the chicken breast.
Yeah, I've been doing that for so long. I ate carrot and I was like, oh, carrot tastes good.
Eat the chicken breast and broccoli, bro.
Yeah, fuck. All right, so you ready to do this with me?
I'm ready.
Weekly?
I'm ready.
If you can do daily with me, whenever you can, yeah, just join me.
Now and then.
Yeah, join me. Weekly, we'll do it, and we'll just stick to it to the core, and let's see the result. But over the weekend, yeah, over the weekend, I'm gonna get my shit together. All right, thanks.